Hey everyone, Annie Dickerson here, co-founder of Goodegg Investments and co-creator of the Real Estate Accelerator, which is what we're talking about today. And I'm here with none other than our Real Estate Accelerator manager, Quentin Briantes. Quentin, how are you today?
I'm doing great. So excited to get back on these real lives and start helping out some other capital raisers with some of our tips and tricks that we have plenty of in our bag to share.
Yes, indeed. So as Quentin mentioned, these real live sessions are our effort to reach into our vault of what we found to work for raising capital and marketing and building a syndication business over the years and really share the knowledge because a rising tide lifts all boats. And we want to be able to help any of you out there who are either starting to raise capital, or maybe you've raised some capital for syndications, but you've hit a ceiling and you want to go higher, to help all of you to figure out the right marketing so that you can grow your investor base and raise more capital. So with that, we do have a topic that we wanted to focus on today. But, if you're watching this, feel free to comment down below, share with us, any questions that you have, whether related to our conversation today or otherwise. And we may use those as topics for future real live sessions. So Quentin, what are we talking about today?
Today, so this is a big question we get, especially with a lot of our newer capital raisers, is how to talk to investors. It's a weird thing going from to ask people for their money. So we've had hundreds, if not thousands, of investor calls now between Annie and our team here at Goodegg, and we've definitely learned and evolved our investor calls over the process of taking so many. So we just wanted to walk through our framework around how we approach investor calls, how to overcome objections, build rapport. So let's go ahead and dive in.
Yeah. So before we get into the framework piece, I wanted to share a little bit about, when I first stepped into this space, as you may know, Quentin, I was terrified of talking to investors. I was like, that is the absolute worst part of the whole thing. I will do the underwriting. I can talk to the brokers. I can go out. I can manage the asset. I'll do anything, but please do not make me talk to people about money. That was like the one thing I didn't want to do. And I'll just share a little bit of the mindset piece that changed all of that for me, and how I eventually overcame that fear and that reluctance. And now I love talking to investors. So for me, it was this simple mindset shift where, in like elementary school, when, I would sell Girl Scout cookies, for example, or the wrapping paper for the fundraising. I'd go door to door and knock on the doors, and I had this catalog, and I'd see, are you interested? This is how much it costs, and I was really selling. And when I first came to the world of syndications and raising capital, I thought of it as the same thing, selling. Like, I give you a deal, I show you a catalog, and you look at the deal and you decide, hey, is this something I want to invest in? And that's what intimidated me, because the cookies I was selling were $5 a box. This is like 50,000, 100,000 at a pop. And so I was terrified that I wouldn't know what to say, or they would think I was a complete dunce. But the shift for me occurred when I realized, wait a second, there's a lot of people out there with a problem. They have this money they want to invest, but they don't know where to get these great opportunities. And so here I am with this connection to this great opportunity. I've already seen it work in my own life, and I'm giving them a pathway and helping them solve a problem. And so when I came at it from that viewpoint, it made things a lot easier and less intimidating.
And Annie, when did you come to that realization that it's a different framing that really is going to help a capital raiser make that shift towards creating that connection and overcoming that mindset with investors?
Well, I think, if you come at it from sales, you're not going to last very long. People will be able to sniff out sales from a long way away. But if you come at it from a place of trying to help people out, people will feel that as well. And so I discovered that very early on is just, as soon as you have a couple of investor conversations, you start to realize what people react to and what they bristle at. There's some things you'll say that they're like, oh, no, a wall comes up and you immediately see them stop, right? And it was in those early conversations that I realized, I should never come at it from a sales angle. I should always come at it from a helping angle. And even if ultimately they don't invest with me, let me see if I can help them, because that's what I'm here to do anyway. But with that, Quentin, should we dive into the framework that we wanted to share with everyone today?
Yeah, so this is something that we coach on routinely in our real estate accelerator program, but really framing from the rapid system. So I don't know if anyone out there's ever heard of that before. If you have, give us a thumbs up in the columns, shoot over what the first R is going to stand for. But yeah, so rapid stands or is broken down into 5 different buckets: rapport, agenda, probing, identifying the opportunity, and a decision with a deadline. So Annie, you want to kick us off with rapport? How do we kick off these investor calls?
Yeah. So the last thing you want to do is say, hey, so and so, nice to meet you. Let's jump right into the deal, right? Because then they're like, I don't even know who you are. So that's why the rapport piece is so important, because that's where you establish that trust, which is super important. And so with every investor call, always start off by seeing if you can build some common ground. Like, for example, ask where they're from, or ask, if they've been on any travels recently, or how they found you even, just to establish some of that conversation and build that bridge between you and them. But Quentin, does that make sense? Or what do you do to build rapport when you hop on a call?
Yeah, definitely little things like that, some little tricks to get ahead of it. You can look up their area code of the phone number if you have that available, just to get some location on them. You can check out their LinkedIn profile as well, or Facebook, and just kind of get a little overview on what their background is, just so to kind of help start spurring that conversation up front. Was one thing I found super helpful.
That's such a good tip, is if you can like, I've had people hop on a call with me and they'll tell me that they saw that I graduated from Penn, for example. And they're like, "Oh, I went to Penn too." And immediately we have this
Yeah,
connection, right? So I love that. That's a great tip, doing a little bit of homework ahead of time.
yeah.
Yeah. What's next?
All right, so heading over to A, agenda. So what goes into the agenda of a call, the flow of it, and kind of setting expectations for the rest of the call?
Yeah. And this part is super important, because you want to take a few minutes to establish the rapport, but then you want to show them that you're leading the conversation, that you're not here just to chatter for a whole half hour, but you have an agenda in mind and you're going to lead them through that. So it shows them that you're in control and that you're leading it, so that they can sort of relax and focus on what you're going to tell them. All right.
Awesome.
So we've got rapport, we've got agenda. Then what, Quentin? What's next?
RAP, probing. So what goes into probing questions, especially related to investors? This is going back to what you were talking about earlier, that listening piece of really hearing what they're saying.
Totally, totally. This is so important, because whereas the rapport just touches on the tip of the iceberg, the probing section is really where you're going to take a deep dive and ask all those questions about their story, about where they are financially, about what their investment goals are. And I find that the more that you can ask these open-ended questions, the more they'll talk, and the more that they'll realize how interested in them you are, which establishes that trust further. So I always ask as a first question, well, how did you find us? Or what are, tell me about your real estate investing background. Have you invested in these types of deals before? And they'll start going into, like I was just talking to somebody yesterday, and they'll start going, oh, well, when I first started, it was 2001. And then I got this deal in this market and that didn't go very well. and then I got this one, right? And you start to understand where they're coming from. And that's what you're trying to get to with the probing questions, is really understanding who they are as a person and what their background is and what they're trying to achieve.
So, and that dovetails super nicely into the I on identifying the opportunity. So, what are you looking for from these responses to kind of move the conversation forward with these investors?
So with the identifying piece, you're really trying to make a recommendation to them. Obviously, you can't tell them invest in this deal or not, but through the probing questions, you're trying to establish whether these deals that you're doing might be a good fit for them and their goals. And so in the identifying the opportunity phase, you're taking what you've heard and sharing it back with them. So based on what you said, I understand that your goal is to build a passive income over the next year and you want to quit your job. And so based on that, would it make sense for me to share an example of an opportunity that we have, or if you have a live deal, would it make sense for me to share with you the current opportunity that we have to see if it's in line with what you're looking for? Or alternatively, I've also had conversations where through the probing section, I've realized this really is not the right fit for them. So then in the identifying the opportunities section, you talk about, well, based on what you've told me, maybe rental properties are the best fit. And here's some resources that we've found that will really help with that. And either way, just showing them that you've listened to what they've said, that you understand them, and you're making a great recommendation to help them, whatever that means for them.
Yeah, and I will say the power of saying no, honestly, can take that relationship even farther to the next level, even though everybody in the capital raising space loves syndications. They want everybody to take part of them. Like, we already know the benefits of it, but being able to say no to someone really helps establish that trust in that relationship, even though, like, of course we want to get these guys in and show them the opportunities that can be good for them. But yeah, don't be scared to say no. I know when I first started taking investor calls, that was really hard for me, but once you did, again, people really appreciate that type of honesty and they feel very heard through it.
Mhm.
All right, so wrapping up to our final letter D of the rapid system, a decision with a deadline. So how do we do follow up with next steps?
Yes. So then after, let's say during the identifying the opportunity section, you walk them through a sample deal or a current deal that you have open. So then the deadline phase, and you always want to try to stick to the agreed upon time frame for the call as well, to show them that you respect their time. So, if it's a 30-minute call, maybe 5 minutes before the end, then you say, great, I know we haven't had a chance to walk through this entire opportunity yet, but let's talk about next steps and how we can proceed to get you into this investment if it's something you're interested in. So then you walk
Right.
through next steps, right? You're like, next, I'm going to send you a follow-up email with what we've talked about and a link to this deck so you can take a look. And then maybe in, let's say, 2 days, we can have a follow-up call once you've had a chance to review, and we can talk through specifics or any questions you have. How does that sound? And then you say, okay, well, great. So they say, yep, 2 days sounds good. Or maybe they say, I'm busy over the next 2 days. Could we meet next week instead? Then you don't let it go there. You say, okay, great. Next week sounds great. While I have you, let's pop open our calendars and let's just go ahead and pencil that date and time in right now. Okay, great. Tuesday at 10 o'clock. Perfect. I've got that in the calendar. I'll send a Zoom link out with that. And in the meantime, if you have any questions, email me. Otherwise, I'll talk to you then. Right? You have a clear plan for
Right.
next steps, and you're doing as much of it as you can on the call itself so that those steps don't drop off, and it minimizes your work that you need to do after the call. So then you can move on to the next investor call.
Right. Awesome. Well, that concludes our rapid system and approach with our investor
Remind
calls.
everybody, remind
Yeah.
everybody what the 5 letters stand for in case hopefully they're taking some notes.
Yes, yes. So our rapport, build that rapport from the get-go once you hop on the call. A for agenda. So set the tone and the cadence of what these investors can expect throughout the rest of the call. P for probing questions. So really ask those open-ended questions, have them really be honest and about what they're looking for, their goals. And from that, you can identify, this is the opportunity there. So is this a good fit for them? Is this something that's not a good fit for them? And how can you really make sure that you're hitting the pain points that they're experiencing with the deals that you're able to offer? And then to wrap things up, D for decision with a deadline. So having clear next steps with what they can expect as far as follow-up after the phone call.
All right, there you have it, the rapid framework. Well, Quentin, before we wrap up, just tell everybody if they're interested in some of the things we're talking about here today, what's the best place or what's the best way for them to follow up and learn more?
Yeah, so definitely we have a RIA 5-day course. This gives you a really high level overview on kind of our framework and approach to raising capital. We'll have the link in the comments below, so definitely go fill that out, go through the course. You'll be sending feedback and homework from each of those days over to our team, which we'll be reviewing. So we'd be happy to see your responses there, follow up with you and take any next steps and take things from there.
Well, until next time, for everybody who's watching, thank you so much. And remember that we're always in your corner and rooting for you, and hoping that this little tip here today will help you to move the needle on your business and raise more capital for your syndication deals. We'll see you next time.
See ya.